content shared in this podcast is strictly for informational purposes and should not be construed as financial or legal advice. 2. The opinions expressed by the hosts and guests are solely their own and do not represent the views of their employers or affiliated organizations. 3. None of the projects or companies discussed should be considered as endorsements or recommendations. 4. While efforts are made to ensure accuracy, the information provided may not always be up to date or entirely reliable. It is advisable to conduct independent research and seek professional guidance before making any financial or legal decisions. 5. The hosts and guests of this podcast shall not be held liable for any consequences or actions resulting from the use of the information provided. 6. All content, including text, graphics, and audio, is protected by copyright laws. Unauthorized reproduction or distribution is strictly prohibited. 7. Any discussions on sensitive topics aim to foster inclusivity and respectful dialogue, but differing opinions should be expected and not attributed to the podcast creators or sponsors. 8. By listening to this podcast, you acknowledge and agree to these disclaimers, and you are responsible for your own interpretation and application of the information presented.
All right, guys, welcome everyone to episode number 10 of the Intersection 4 podcast. We have your usual guests here. We have Hamis, the investor. We have Brendan, the founder and engineer. And we have me, who can never come up with a description for myself, but I think I'm going to settle on product guy, engineer, and philosopher. I'm just going to go with that. Today, we have the last episode of the year for the Intersection 4 podcast. So what we're going to do today is we have 8 big themes that we saw playing out throughout the year. We're going to give a quick overview of what happened in that specific area this year and how that is going to impact our outlook for 2024. So we have a pretty big episode ahead of us. So let's just jump right in. We're not going to tell you the episodes ahead of time. We're just gonna roll with it. So, of course, what's been in everyone's mind in the tech world or in the finance world for the last 6 months, 12 months has been of course AI. And this year, a lot of people saw it as a year in which AI came to the public eye, definitely, and to never lead the public eye for the first time. So we have our AI expert in resident, Brendan. So I'll just pass it on to you. Give us a little overview of, in your perspective, what were the main things in AI that happened this year?
Yeah, absolutely. Yeah, this was the breakout year for AI, specifically generative AI, primarily coming out of October, November, December of 2022. OpenAI had some pretty big breakthroughs. Those found their way into ChatGPT, the consumer product. And from there on, we saw a huge storm of consumer usage, which translated into venture dollars, additional startups, and surprisingly, a lot of the incumbents really stepped up to the plate this year, which was exciting. Microsoft, Intercom, HubSpot, big names that you maybe would expect would take a little bit longer to adopt, have really made some headway. And more recently, we have Amazons and Apples as well. Those are the big topics on the overarching AI world. Subtopics, I think we saw some pretty strong advances in the audio, image, video space. All these areas that have historically been completely off limits to models and to computers. We've had to rethink how we imagine creativity in a world where potentially an AI can be as creative or more creative than humans. And I think the big kind of end of the year is a lot of these co-pilots. So how do you interact with agents or with an AI system rather than directly against it?
Mm-hmm. And what's happening here with the hype that we're seeing with AI? I think throughout the year we saw the hype become more sober. So everyone at the beginning of 2023 was excited and thinking that things were going to change like overnight and the entire world order was going to be shifted because of AI. How are we looking into for next year in terms of like, do you feel in the circles that the hype is still there? We're still overhyped. Are we properly hyped or? How do you see like the actual applications, like game-changing applications of AI looking into next year?
Yeah, I think the hype is absolutely justified when you think of the core workflows people are using this for. I think there's always going to be a level of like media overhypement or even venture overhyping. But I think the actual applications have really started to find their way into really valuable products. Next year will be interesting when we start to understand who's going to win out of the startups and the incumbents. And then kind of like one of the predictions, which I'll hint on, is I think there's going to be a nice overlap with the hardware space as we find that software is a democratized layer.
Mm-hmm. Mm-hmm. So one of the things that's even like surprising for me is I don't think I've ever seen another technology where companies are raising like multiple rounds within the same year and continuing to do that without, like, I'm sure that there's some progress, but you can't make progress that fast. And I think it's
Yep.
almost becoming the pitch is becoming that we need the war chest, otherwise we're going to get left behind. So you're seeing, Anthropic and raise like multiple rounds in the same year. And Anthropic apparently is expecting, north of $800 million of recurring revenue by next year. And that's the big projection by any means, right? For a company that's a couple of years old. So do you believe those projections? Like, do you think it's coming from the consumer applications or the business applications? Like, because I find it quite difficult to believe those projections, but maybe I'm missing the point.
Yeah, I don't know the exact numbers on Anthropic, so I won't comment directly on if I think they're going to hit theirs. I do think they are going to have a pressure to reach that level of like output, given like the input was so high. I think there's a different kind of scenario that's playing out though. Is there are more people that are able to operate highly levered businesses with a smaller team and with faster go to markets. And I think that's super exciting too. Like, I don't think the money accumulates to the Anthropics and the OpenAIs, especially because like the advantages are simply that they have a head start potentially, but there's no core data advantage that really has been sought out.
Hmm.
Unknown though, unknown.
Hmm.
Do,
Hmm.
do you think? I think one of the biggest things that has been mentioned of AI and perhaps even over spoken of is how AI is going to disrupt the job market and replace a lot of manual intellectual tasks. And I think we've seen a lot of studies this year happening, and we've seen and we've felt first-handed the output and performance potential of using large language models for any task from copywriting to email responses and what have you. But do you think that we're actually going to start feeling at a bigger level those job displacements starting next year? So like maybe firms that this year realize, oh, I have like a team of two copywriters to do all my marketing materials. I can actually get rid of them next year and just do everything through one of these models that I have access to. Do you think that's going to actually start hitting the broader society next year?
I think we actually had that shift happen this year. I think there was a period
Yeah.
in which we had like some like set of layoffs, like 20% at like the major firms. We like attributed it to AI, but really I think it's just a lot of people need to make cuts. There's a broader
Hmm.
like
Hmm.
macroeconomic condition. I don't know if that's going to like play out directly through AI. I'm less convinced that AI is going to take jobs, especially because like these knowledge work jobs are hard to hire for. So majority of the time, if it's like a sound business, they should just be placing them in additional roles within the company to get higher leverage out of those individuals.
Hmm. Yeah, I would
Yeah.
agree with that. I think that in the short term, um, what every company wants to do and probably what they're able to do is just get more leverage out of the same people, just get more productivity, because the tools are not there to replace a person today. They eventually can get there, but they cannot completely replace a person today. So I think most of the layoffs, at least in this year and even next year, are going to be more driven by financial, decision making. It's not going to be because you really truly, replaced an entire person. The technology is not there yet. A company can increase the productivity 10, 20, 30% of each of its team members, but it's not going to be able to increase it 99% where the second person is no longer, viable anymore. So I think they might guise it as, oh, we're just, becoming a leaner, better operation because we're using AI. That's just like a way to spin it. But I think it's going to be largely driven by financial performance. But over the long run, I think the fundamental like workflows will change. The tools will start being more integrated to the point where your productivity improvement is so high that the next time you're hiring somebody, you're like second guessing it because your two-person team now can do the output of originally what took 5 people, right? So I don't think this stuff happens as quickly as politicians will make you believe or the media will make you believe. It took us hundreds of years to get to this point of jobs and like what role needs what type of person. It's not going to evaporate in a year.
Mhm.
It will take time.
Sam, I have
So,
a thought for you.
go ahead.
What is your philosophical interpretation of 2023? Like how have you re-understood
Yeah,
your thoughts?
that's actually the point that I was gonna make now. So let me share this. I've been
Hmm.
working through this book right now. Fantastic book. Couldn't recommend it enough. It's called The Coming Wave. It's by Mustafa Sulaiman. I don't know if I'm blundering his last name, so forgive me if I am and you're listening to
No, you're
our
good.
our
You're
pod.
good.
But so he's the co-founder of DeepMind and co-founder of Inflection AI, and he basically talks about the coming wave of technology and all of the social changes that they're going that the incoming technologies are going to bring. And I think what's clear from 2023, regardless of product releases or new features or even technical advancements at the model level, I think what's
Hmm.
clear for everybody in society is that we are at the verge of a coming wave that is going to be impossible to contain. And the two
Hmm.
fundamental technologies that are marking this coming wave are, of course, AI and biotechnology. And he talks a lot about how this is going to impact society. And I think 2023, I think marks an inflection point in which everybody realized, oh, wow, the next 10 years are going to be fundamentally different from anything that society has ever seen before. So, fantastic book. I'm not going to get into a lot of detail into how this coming wave plays out, but I do think that everybody has seen it. Everybody knows it's coming. And a lot of people are starting to realize that the biggest challenge, more at a societal level, that we're going to be facing over the next few years is going to be how do we make sure that this technology, both biotechnology and AI, are applied for the common good, more so than for short-term gain of a handful of people. So, fantastic book, recommended enough, and maybe we can go back to those more philosophical ideas of AI on a future episode when some other
Hmm.
scandal happens. But okay, any final comments here, or any final predictions, or any final thesis of AI for 2024 or beyond?
Um, yeah, I think like I've been thinking about this a lot. I've been trying to, in my head, like categorize all the investment opportunities across AI. And I put them into like four large categories. So I put companies like OpenAI into core AI, the base models. Then I put companies like NVIDIA into AI hardware. Then I put companies um, like vector database companies. I put them into AI infrastructure. And then I put companies like Tesla and Microsoft into applied AI. So
Mm.
these are like the four big categories. So like my gut feeling so far from the research and the conversations that I've had over the last year is that right now all the focus is on core AI and AI hardware. But actually, the winners of this over the next couple of years are going to be the applied AI companies where they already have the distribution, they already have a very strong business model, and they're just using all this great research that's being done by the first three categories to expand their business and expand their margins. But the actual businesses that are like pure AI businesses, I think are going to struggle to generate the return on the amount of capital that is being deployed. I think
Interesting.
that so if I could do it, like there's not an easy way to do this, but if I could do it, I would long applied AI, and I would actually short everything else for the next 10 years. And I think that applied AI is going to outperform the rest of them.
It's interesting though because, and I just want to make that comment and make sure that we move on. But it's interesting because it's a little fuzzy because a lot of the applied AI companies are also core AI companies. So you have
Hmm.
Microsoft, you could call them applied AI, or you could very well call them core AI. You have Google, you could very well call them either one. But really, really interesting categorization. But okay, for interest of time, let's move on to our next theme of 2023, and that is definitely going to be a big one for 2024, which is geopolitics in general, particularly the relationship between the US, India, China, and just general conflicts that happen throughout the year. So, I want to start. I'm going to give an overview of some of the things that happened this year. So I want to start with something that happened 2 years ago in 2022 that I think represents really well kind of the shifting environment that we're seeing. So as soon as the war on Ukraine broke out, Naval made this tweet that was so profoundly, for me at least, it was so profoundly impacting that I was like, wow, this marks a shift in the geopolitical landscape of the world moving forward. He just basically said Pax Americana has ended. So Pax Americana is an analogy of the Pax Romana, which was a period of a couple hundred years of peace enjoyed by the Roman Empire under some of its maximum strength. The Roman Empire was so big that nobody there attacked it in a meaningful way. There were small pockets of conflict going out throughout the Roman Empire, but no major conflict. Mm-hmm. He was making a similar analogy with the Pax Americana, which is an actual term, which basically talks about a long extended period of peace after World War II, enjoyed mainly by Western countries. With the Russian invasion of Ukraine, this I think marked the end of the big policing of the U.S. in the global environment. And we've seen a lot of, this year at least, we saw conflict emerging in the Middle East with the conflict between Hamas and Israel. And I think we are on the verge, perhaps, of seeing more conflict. And this is one of my predictions for next year. We're perhaps on the verge of seeing more conflict in South America next year. Between Venezuela and Guyana, there's been a lot of growing tensions between those two countries over oil reserves out of the coast of Guyana. So it just seems like a lot of countries that a lot of pockets of war are starting to reemerge in a way that is concerning to see. And I think this points to a bigger geopolitical shift that we're seeing in terms of world powers. So a couple more things interesting that happened this year in the realm of geopolitics, where, for example, the rising tensions between the U.S. and China, particularly over Taiwan, which is very related to what Brandon was talking about on AI. So most people have like a general knowledge of the conflict, but the TLDR basically is that Taiwan sits at the very center of the infrastructure needed for our modern world. Everything that we have that is minimally electronic, from probably your calculator all the way up to the latest models, depend heavily on chips that are oftentimes designed by TSMC in Taiwan. And China this year published their newest map. So it's kind of like a geopolitical, it's a geopolitical play that they do fairly often, in which they publish a map saying, this is China. And it's clearly not China as it is understood by international law, but it's the way that China sees itself. Clearly, Taiwan is in it. There's a lot of areas on the South China Sea that they claim to be theirs, and they're starting to intimidate a lot of the countries in that area. The U.S. has been growing its military presence in the South China Sea, and then there's just rising tensions everywhere. So it's also a concerning thing to see. I don't think we're going to see an all-out war happen next year. I really hope that it doesn't, at least over Taiwan. But the rising tensions are just concerning, and I do think that we're going to see something happening definitely in this decade. Couple more things interesting that happened on the geopolitical front before I bounce on to you guys is that India finally surpassed China as the most populous country in the world. And a lot of people in technology have been moving over to India as probably the next big rising global superpower, the same way that China was at the beginning of the 2000s. We have also seen a lot of mismanagement of the U.S. I mean, the debt is at an all-time high. The printing of money that happened over the COVID-19 pandemic has left the U.S. overextended in terms of financial obligations. Serving the foreign debt of the U.S. is becoming progressively more and more complicated. And the U.S. is also overextended militarily with aid in Ukraine and with pockets of conflicts emerging in other countries. And lastly, and I think this is perhaps my biggest prediction for 2025 and my biggest theme of 2023 in the geopolitical landscape, is that very clearly globalization is dying. What I mean by that is throughout the 90s and throughout the early 2000s, everybody in the Western world thought of civil globalization as the antidote to war. We wanted to basically build a world that was so interconnected and so interdependent that any possible localized conflict would be prohibitively expensive for everybody involved. And that is the way that we would go ahead and assure peace. So we developed supply chains that were interdependent, and we developed very complex mechanisms of diplomacy to ensure that the supply chains continue to function and our modern economy continues to function and so on. And a lot of those are starting to shift fundamentally. After the COVID-19 pandemic, a lot of people realized, oh crap, actually globalization may not be that good of a thing, because a boat gets stuck in the Suez Canal and the entire global economy gets disrupted for months, or because a virus implodes in China and then the entire global society is disrupted for several years, and then localized pockets of minor conflict that would have otherwise been contained become global problems as well. And this transpired this year very fundamentally with a lot of the U.S. investment in bringing semiconductor manufacturing companies over to the U.S., trying to rebuild a lot of the companies that were otherwise outsourced, and the similar trends are happening all over. So big countries are trying to reduce their dependency on foreign powers for some of their most fundamental imports and commodities and technologies, and we can clearly see more and more that the hyper globalized world that we built over the last several decades is starting to turn inwards. And this is definitely going to change many things about the way that just the economy and the world functions. Okay, I'll pause my overview there. I want to get your thoughts on this. Hamis, from a capital markets perspective, how do you see this entire geopolitical landscape, and how do you see kind of the conflicts that we're having and the outlook for 2024?
Yeah, I think it's an interesting point that you make of how this could be the turning point of, the US being the police of the world and keeping the world in relative, peace over an extended period of time. I think, 50 years ago, if you ask somebody, how does the US, just like every other superpower, sort of, you know, take the second place and the third place, I think a lot of them would have talked about, another international power taking that place and being that enemy that they have to compete with. And obviously, a lot of people would have put China in that bucket. I think over the years, what has become more clear is that just as important as it was the external powers that were putting pressure on its dominance, there was a lot of internal stuff that was happening as well. That I think when we look back, when all of this is said and done, and the US is, maybe becomes the second most, the largest economy in the world, I think we'll look back into a lot of the internal strife and conflict that we have, which might not be violent in the same way, but it's still just as pervasive. It's on everybody's mind, like it affects everything that we do. Left versus right, climate, believers, global warming believers versus not global warming believers. Like there's just like every aspect of, I feel at least, American society that you look at, there's like two very very like stark differences between what people believe. And I think that's kind of eating up its competitiveness from inside and affecting everything. But if we stop being a world where whichever country can produce that good or service the most efficiently, then everybody has to pay more for everything that we do. And we're already at a point where things are prohibitively expensive. They become prohibitively expensive in most parts of our life. But if you also start deglobalizing, then the thing that could be built really well in Taiwan, now you have to figure out how to build it really well in the US, and you will not have this global equilibrium of the product and service coming from the place of the highest efficiency. And so I think if the fight against inflation, governments take it seriously, then they cannot have a deglobalizing world and still fight against inflation. We've enjoyed so much of this over the last 20 years that it's the normal for us that over time things have become cheaper because those things have gone to the places of most efficiency. If you flip that over, and now suddenly, like the laptop that you bought or the TV that you bought 5 years ago, today that TV is cheaper, objectively across the board. If it starts becoming more expensive, we will look at a completely different world. And so I think that it fundamentally changes the inflation fight. I also think it fundamentally changes the US's ability to police or bully the world. because a lot of the policing happens through the US dollar and it happens through the sanctions. And if you go into this deglobalized world, like you were saying, where nobody, is doing business in the US dollar anymore, they're not doing as much business with the US, like a lot of that soft power starts getting eroded away. And just as powerful as the military is, I almost see the military as like the enforcer of the dollar, and the dollar actually being the biggest weapon that we have. And once you start going backwards, like that's no longer your biggest weapon, and then you have to bring out other weapons that are not good for the world.
Brendan, I wanna ask you a question here. I think at the core of this shifting geopolitical landscape sits technology, um, and fundamentally new ways to forge war, and to project strength over geopolitical enemies. And with your background in the defense contract industry, I think you may have some interesting insights on how do you think tech underpinning this geopolitical landscape, like how do you think the technological balance that we have reached right now between, say, the US and China, as two examples, how do you think the things are going to play out from a technological perspective next year? Because whenever I see a lot of Chinese officials talking about their bet for the next 5-10 years, they always say we're doubling down on AI, we're doubling down on cyber warfare, we're doubling down on a lot of we're doubling down on technology and the development of technological industries at home as our key, or as our token to global dominance, or at least to being one of the biggest, if not the biggest, world power down the line. How do you think things play out next year? Do you see the U.S. position to continue to be that leading force in technology, or do you think we're like our position is getting a little shaky?
Yeah. An interesting thought I had this year was, I think overall technology has been a force multiplier on the economics of a country and has assisted in like the defense, intelligence, and like military capability set. But I don't think in the last like 15 years we've like required it from a sole source. This is like what allows us to be advantageous. Like if you think of the U.S. military, like granted, technologically advanced, but there is like strong parties out of Israel, for example, in their cyber fund, and a few others like around that space. So I would be interested to know maybe in the next several years if this actually like becomes like a core advantage. If you think of companies like Anduril, and a few others in the space that are kind of like using this as like a new area to identify what are like the ways we can take AI to the front lines. Scale AI is doing something very similar, where historically your defense contractors are going to be 10 to 15 years behind, which is not the case, throughout all of history, right? In the 60s, 70s, 80s, we had the Cold War race, which effectively was a missile program masquerading as a space program, for developing, among other things. But I think that's going to be potentially an area that like we see more development and more investment.
Do you
Right,
think
Yarm?
that just like SpaceX, do you think there'll be a lot of privatization of what historically used to be the government's kind of role, right? Because
Actually,
SpaceX
I
did
have
that
a
like super effectively. So why not do that? Why can't, you know, Scale AI be the SpaceX equivalent for AI technologies for the government?
Yeah,
I have a I want to hear your thoughts, Brandon, but I have a couple thoughts there too.
Yeah.
I think one, SpaceX, even though it is a private company, a large portion of its revenue is still government, and it's like definitely part of the reason it's able to survive was like the early years of that being possible. Will that be the case in the future? Who knows? Every year, the SIBR program, which is a small business innovation fund, goes up for renewal, and every year we almost think it's going to get kicked, which is kind of like one of the ridiculous parts about our system is that that small fund, which is really pushing a lot of money at like the smaller companies and startups might get overturned. But I think overall there is opportunity. I don't know if it's going to be through AI or through like AI enablement. Right? I would see Scale as like AI, and then a Anduril as AI enabled, right? Like their core competency is like hardware and software, whereas a few of the companies are like selling AI platform or product by itself.
Mm-hmm.
So
Mm-hmm.
I wanna close this with a thought here. To your point, James, of is our private companies or our companies, period, taking over the role of the government. I think a lot of the advancements in technology that we saw throughout the Cold War were a good collaboration between government agencies and private industry emerging at the time. But what I want to highlight is that things have shifted so fundamentally that I think only now the government is starting to realize what happened over the last 20 years. So one of the biggest one of the biggest agencies, government agencies that was behind a lot of the technological advancements that we had over the Cold War was DARPA, which is the Defense Advanced Research Projects Agency. If you look at 2023's DARPA's budget, I don't think the 2024 budget has come out yet. I'm just going to share my screen here. But the 2023 DARPA's budget was $4.1 billion, which is a lot of money, right? For a government agency, it's a decent amount of money. I think it's similar to NASA, if not bigger than NASA's.
Mm-hmm.
But if you look at the biggest spenders, the biggest R&D spenders of the top 10 biggest companies in NASDAQ, it is orders of magnitude higher. So DARPA wouldn't even be on the top 5. We have Amazon, we have Alphabet, we have Meta, Apple, Microsoft. All of these companies, except for ASML and maybe PepsiCo, are American companies. And that's a good thing. But I think the problem over the last 20 years of this hyper-globalized world and hyper-capitalistic world was that the government was operating on an implicit assumption that capital markets would maximize for America's national interest. And we're now just starting to see that that's fundamentally not true. The incentives of capital markets is the incentives of markets in general is to make money, and you make money by increasing revenue, reducing costs. One of the easiest ways to reduce costs, particularly, for example, or case in point here being the chip industry, was to outsource a lot of the assembly process and manufacturing processes and the entire assembly line to Southeast Asia. Now you find yourself in an incredibly interconnected and hyper-dependent supply chain on a key individuals that may be threatened by some Chinese action, and that is definitely not in the U.S. National interest. Over this year and last year, we had a lot of instances in which the government applied sanctions on several Chinese companies and their acquisition of semiconductor material or semiconductor technology. And a lot of U.S. companies, smaller companies, just had such an incentive to deal with Chinese companies that they just went around a lot of those sanctions and continue to do so. And I think just now the government is starting to realize, oh crap, capital markets don't necessarily will maximize for our national interests. And I think that underpins a lot of what you mentioned. Yeah, a lot of these companies are doing more than the government in terms of research, but they're not maximizing for the same things. And I think that's something that we're seeing for sure.
Yeah.
Okay. Any final thoughts here, or shall we move on?
No, sounds good to me.
All right. On interest of time, let's move on here. Another big theme of 2023 was climate. Brendan, on to you. Give us an overview. I mean, 2023 was again the hottest year on record, but I think you have some interesting thoughts around how this impacts alternative energies moving forward, alternative energy sources.
Yeah. I think overall we had a few things that were either top of mind or kind of like continue to get brought up. Renewables, ESG, the cost of solar has gone down, battery technology has improved, the access to battery technology, and electrification of the U.S. grid system, fusion and fission. There's breakthroughs twice this year from Los Alamos as well as from a few other laboratories in the private sector or startups. The reluctance people have historically had towards nuclear has gone away. I believe the U.S. just opened another nuclear plant and got up and running with that. Those are just a few of like the high level areas. And then the last is energy demand. I think we've seen obviously in China and India as like the general per capita GDP rises, large amounts of energy demand get sucked. And then areas in which don't have direct access to energy. Germany, for example, saw massive shortages after Russia cut off their pipeline, or the pipeline magically had an incident. So I think this year has been coupled with a lot of energy related topics from the demand side, from the alternatives, from the startup and venture side. And then the last one in my lane of AI is we kind of circle back to compute and energy usage across a lot of these like base systems as kind of like the core construct, which regardless of how you're operating these models, energy is going to be kind of like a core component.
Mhm.
And
Yeah.
this goes hand in hand with the entire deglobalization trend that we were talking about earlier. As cost of energy gets cheaper, as alternative energy sources become more widespread, I think countries will begin to have the luxury of saying, you know what, we're going to reduce the import that we have of oil because XYZ. And I think this year we had kind of on a bit of a tangent here, but I think this year we had the first time that a nuclear fusion reaction outputted more energy than what it consumed, right? So I think that's another massive milestone. I'm really excited also about nuclear.
Mhm.
But yeah, I definitely think that the energy sector is. I think climate is ceasing to be an activist issue and is becoming more of an industry issue, and that is just really exciting to see. Both because I love the planet and
Yeah.
I don't want us to die in a climate change apocalypse, but at the same time because I think unlocking a lot of these new energy sources will be very foundational for us to continue to advance as a species in general.
Mhm. Yeah.
Hamiz, how are you thinking about the balancing of the ESG investment kind of thesis and then the um, new alternative investment like plays that potentially are like high value?
Mhm. Yeah, I think that the challenge with ESG or any of these investments, both from the public and the private side, is that they take a very long time to play out. More longer periods than people stay elected, and longer periods that then investors want to wait around. And so, even though you might have like breakthroughs in technology or the cost of, let's say, solar come down significantly, it will be 5, 10 years before that actually flows through and becomes a fully functional facility to be producing electricity at the level that you need. And so I think that because the incentives are set up to be much more short term, both for private allocators of capital and public allocators, that's why it's so difficult to get everybody around this concept without some level of regulation and things like that. And so there is a very big push within at least the private side of investing to be thinking about ESG as an important factor, but it is still seen as a unproven factor that drives returns because it takes 10, 20 years to see those returns play out.
Yeah.
And so that's why it's going to be challenging to really rally around a bunch of capital for this. But the truth is that everything about our society today has improved. It will be very difficult for anyone to argue that really on any metric our lives are not better today than 100 or 200 years ago. The only metric that, not the only, but the one that stands out to me is that our environment has deteriorated. And that also, objectively you can see and prove. But on every other metric, like medical research, medical output, energy research, energy output, all of that stuff, like we are better off today as humans than we've ever been. But on the environmental side, that's probably the place where we get the lowest scores. And what we want is we want a world where everyone can have the maximum energy consumption possible, because the higher your energy consumption, like the likely that the higher your quality of life. And so we want to get to that world, but it's just a challenge because the incentives are short term for all the people who can make it happen. But the actual play out of their thesis or the play out of the results is long term. And people don't think in 10, 20-year terms. You have to be very specialized institution to have that time horizon. So we have to fundamentally change the time horizon. We have to change the incentives for there to be a mass push to get this done.
I think energy is very exciting, man, because like energy sits at the foundation of everything. If advances in alternative energy sources continue to increase, the cost of energy will go to zero. If the cost of energy goes to zero, the cost of compute goes to zero. If the cost of compute goes to zero, the cost of AI goes to zero. And it's just like just technological renaissance all over again, and planet type 2 civilization. Here we go. It's just an exciting time. I feel very optimistic. And I think this is the first time ever that I look at the situation with the climate and feel optimistic more so than pessimistic, precisely because of all the advancements that we're having in the energy sector. And I think that says a lot, at least for me. Okay, any final remarks here, Brandon, Hamis, or shall we move over to our final topic here?
Let's move forward, yeah.
Okay, so Hamis, this one is all yours, man. Talk to us about capital markets in general. So we're closing the year in a very positive outlook. I mean, S&P 500 is an all-time high, and so on and so forth. Crypto recovered pretty well towards the end of the year. There's a lot of excitement happening on alternative assets. Walk us through some of the biggest things that happen in capital markets this year.
Yeah, I think it's like a perfect example. Last 5 years, a perfect example of a reversion to the mean. It's also a perfect, textbook example of a roller coaster ride. And some of it was, self-inflicted. Some of it was experimental, monetary fiscal policy to try to figure this out. So investors have been really uncertain, and they continue to be uncertain on what needs to happen and how they need to position themselves. And nothing kills the market, or nothing confuses the market more than uncertainty. It really spooks investors. And so what at least I'm seeing from my purview is that, yes, there's a lot of capital flowing back into the public markets, but there's a ton of capital over the last couple of years that has gone and parked itself into the private side of the markets. There's a number of reasons for that, but one of the more obvious reasons is that private markets are not mark to market every day. These investments play out over 10-year, 20-year period. They're long-term investments, and you don't necessarily see the price action on a daily, monthly, quarterly basis. And so a lot of the investors find that to be a better structure. And definitely a lot of the entrepreneurs find that to be a better structure because they can focus more on the long-term growth. It's very difficult to get a company to focus on long-term growth when they see their price every second of every day, right? It naturally has an impact on how you run the business. And so one of the interesting surveys I was reading the other day is that for the first time since they started doing that survey from family offices in the US, family offices had more capital invested in the private markets than they did in the public markets. And it was only like the tipping point was only by a little bit, but that is not what is taught in textbooks, and that is not what is recommended for like most investors. What's recommended is that you have a bulk of your investments in like very liquid public markets, because over time, public markets have done well, and you have the access to the capital, and a smaller portion of your portfolio goes into alternatives, which includes private equity, venture capital, hedge funds, and everything in between. But even for me, that's surprising that for the first time, like the alternative assets category is bigger than the traditional assets category, at least for a certain group of investors, which is the family office.
What do you think that is? Like, what's underpinning this? Like, is there just like a lot of money with these family offices? Is it like a change of vibe of public markets? What's going on?
I think the public markets have performed, but with too much volatility. And the private markets have outperformed with much less volatility. And so some of that volatility just comes from the perception of volatility and risk, right? Because when you see the volatility, it feels riskier. When you don't see the volatility, it feels less risky. But I think it's like a deeper fundamental thing where more sophisticated investors have access to more sophisticated and specialized investments on the alternative side. And less sophisticated investors, traditional mom and pop that are not professional investors, they have access to the public markets, and not necessarily access to the private markets. And so, when I went to school, I studied alternative assets as like the alternative, the smaller portion of the portfolio. And now, for a lot of investors, they're becoming the traditional part of the portfolio. And right, and like stocks and bonds are now alternative. Like you have to be like you have to go against the grain to invest in the public market. So it's like totally fascinating to me because even in like the short time that I've been a professional investor, like I've seen this complete flip happen. But I think for the vast majority of investors, like the traditional mom and pop investors, like their portfolios will still look the same. It will be probably all traditional, maybe a small sliver of alternatives. But the more that you go into pools of capital that are more sophisticated and more permanent, the more that you see them going into alternatives. Because generally speaking, and I can show you a chart, alternatives do outperform traditional assets, and they have for many years, and the expectation
But
is that
Hamis,
they will continue to do that.
but okay, Hamis. So let me stop you here for a second because I do want to dig a little bit deeper into this because I think it's fascinating. So I think a lot of these family offices that are fueling a lot more money into alternative assets are mainly doing so through hedge funds, right, and asset managers. Although I'm sure there's some direct investment too. I guess isn't this more of a consequence of the massive number, or at least that I've perceived, massive number of new funds that have emerged over the last 3 years, and the capital concentration. And I think two things that we've seen happening over the last 3 years, maybe since COVID, is wealth has concentrated significantly more, and this is longer term, but wealth has concentrated significantly more in a very select few. Those very select few are usually the ones who have access to all of these private markets. And simultaneously, over the last 3 years, more on the shorter term, we've seen a lot of hedge funds trying to capitalize on all of that money now sitting with wealthy family offices and just emerge and do, hey, this is my thesis, and all of these are out raising money. Would those be maybe like explanations as to why a lot of money is getting channeled into private markets?
Yeah, that's definitely a part of it. I think that also what has happened is through technology and through regulation, access to to the public markets, excuse me, has become very easy and very cheap. So you no longer have to, go pick stocks on your own, or you no longer have to have your own brokerage account. You just go buy the S&P 500, you get paid, you pay 0.2% for that, and you get access to the entire market, right? And you can cut and slice that market however you'd like. You can have like sector specific allocations. You can go long, you can go short. And so much of the public markets have become so democratized that it is very difficult for an investor to pay you a high fee for getting them beta returns, which essentially just
Mm.
means that if the market goes up 10% and you go up 10%, you're just generating whatever returns the market is generating. And so people have stopped wanting to pay fund managers for beta returns. They say, if I wanted beta returns, I can get it in an ETF that costs me basically nothing. And
Mhm.
so the investment managers have to start really focusing on strategies that generate alpha, which is, the market goes up 10%, you go up 15%, you've generated that 5% additional as alpha because you're managing it a little bit differently, your strategy is a little bit different, your process is a little bit better, something like that. And so the interesting thing about the alternative space is that it is very difficult for you to uh, perform simply based off of beta returns. A lot of the returns get generated on like the work and the skill of the investment team. And so investors are willing to pay a lot more for those alpha generating strategies that go above and beyond what they can get in an ETF. Now, there will be a day, and people have been, you know, doing all types of innovations here, where alternatives will become as readily and easily accessible and cheaply accessible as traditional assets. And when that happens, then the shift will the shift will continue where the the fee models and the structures keep getting compressed. Um, and so what's happening essentially is that the best investment managers of the world obviously are gravitating towards the structures where they can charge the highest fees. And so you started seeing like all these back in the 90s, the best stock pickers in the world used to work for the mutual funds.
Yeah, yeah.
Now the best stock pickers in the world like want to work for hedge funds because they can make a lot more money doing that than working, maybe for an ETF manager or a mutual fund manager. So there's this like pull for the talent, all the investment talent to be in these like much higher return, much higher, much more complex strategies because they make a lot more money there. But eventually, I do believe that with the advancement of technology, especially blockchain technology, I think a lot of assets will be tokenized to the point that they can then be a wrapper can be put around them and they can be accessed the way that an ETF is accessed today for the public
Okay.
markets.
I think so. Okay, I wanna wrap this discussion just with a quick thought here.
Mhm.
So I think one of the biggest trends that we've seen over the last few decades, and by the way, it's one of the hallmarks of a decadent society, is a widening wealth gap, and we've seen that in the U.S. clearly. So the wealth gap is
Mhm.
getting bigger and bigger and bigger, and I think at the very center of the widening wealth gap is laws around investor protection that are so unbelievably backwards and that are so like in today's world is just so in my view at least, they're just so silly that all they're doing is just perpetuating the wealth gap and making it even bigger and bigger and bigger. If
Mhm.
for the first time the alternative asset class or the private markets are seeing more money influx than the public markets, you basically have a law limiting common day investors from being able to
Mhm.
access those private markets. And if they
Mhm.
don't have access to those private markets with higher returns, with higher opportunities, with more money, you're going
Mhm.
to continue to perpetuate and even widen the wealth gap that is already really bad in the US, and things are going to continue to
Mhm.
get worse.
Yeah.
So just wanted to close with that remark. I think that's
Yeah.
bad. But I mean, not, I think that a specific trend is bad in general.
No, absolutely, right? Like you can have a doctor that has no idea how to invest in any market in the world. They're very good doctors, but terrible investors. But they are an accredited investor and a qualified purchaser. They get access to everything. But you can have a finance student, an MBA coming out of finance, directly who has been trained for 6 years on how to pick investments, and they are not an accredited investor, right? You can have a professor, like you can legitimately have a professor of finance not be an accredited investor, right? And so it is set up the wrong way. I believe that too, and the small gap in that, like let's say the market averages a 10% return and a private equity fund averages a 15% return. When you compound that over 20 years, it makes all the
Yeah, yeah.
difference.
Just continue to
It,
widen the
it,
gap over and over
yeah,
again. Yeah.
it makes all the difference. And so, one
Yeah.
of the reasons that so many of the pensions and the endowments are so heavy into alternatives is because that is the only way for them to have any chance of meeting their liabilities. If they stay in the
Yeah.
public markets growing at 5, 10% a year, they will never meet
10% a
their
year.
liabilities.
Yeah.
And so they have to go into these private, more liquid, riskier in most cases investments to be able to meet the liabilities that they have.
Hmm.
And this is why I love crypto. Crypto, if the policy doesn't change, crypto is alternative, and that's part of why I love it. But okay, let's put a pause on this, and then let's wrap up with predictions. So, Hamis, if you can stop sharing your screen, and let's go to some final predictions of 2024. So I'll start with you, Brendan. Give us one or two wild predictions of what you think may happen next year.
All right, I have two here. First one's a lighter one. I think hardware is going to have a big year. The benefits to real world sensors is kind of fully proven out now through Tesla. Big jump from NVIDIA. Apple's crushing it. I think there's enough money going into the space. It's easier to develop. Edge and IoT are proving out in the consumer lanes from Whoop levels, healthcare, wearables. And then there's a lot of benefits in the verticalization of the software and hardware stack. Second big one, this one's a little bit more out there. I think Africa is going to have a bit of a big year. The Belt and Road Initiative slowed down from China. It is by and large the most research-rich continent in the world, from gold, diamond, oil, natural gas, copper, uranium, and I think they're due for some interesting stuff down there.
Hamis?
Interesting. Yeah. I think that we're already starting to see this. I'm generally very skeptical of government and regulators, but I think we'll realize just how intertwined and corrupt the regulators and politicians are with each other in 2024. I think that all these agencies that are supposed to be independent are obviously not independent, and it will show up in the election and everything surrounding that. And so I also come from a part of the world where a lot of stuff is difficult to believe. So it's a little bit, harder for me to trust governments on this. But coming in, I thought the U.S. politics and system would be different, or um, at least better. But the more that I study and learn about it, the more I realize politicians is the same across the world. And politics has too much money involved for it to be for the people. Um, and so that's one prediction. I think we're going to see some crazy incentives intertwined that hope we had hoped before were not like that. And I think the second thing that will happen is, I think for a lot of the technology plays, when the Fed starts cutting and starts easing, which they already are starting to do, you are going to get some totally ridiculous valuations, totally ridiculous. Even on top of what's ridiculous right now, I think it's going to get more ridiculous, and that's going to be quite interesting to see. But I think that that's the new normal. I don't understand how in a deglobalizing world they get inflation under control. I don't see how that happens. And so if they keep deglobalizing, I think the US will become extremely uncompetitive on all aspects, and they will continue to push prices up for everything. And the only savior that we will have is going to be technology and the advancement of productivity through technology to try and keep this under check. And I think globalization will come back as a necessity. First, it was a luxury and a privilege, but I think in the next couple of years, American business will not have the luxury to do that anymore, and they will have to continue to globalize to survive. Yeah.
Okay. And then I have two predictions here. So one is war is going to break out in South America next year. I think the authoritarian dictator of Venezuela he's like the most wicked, stupidest national leader that I've ever seen in my life. And all of the threats and geopolitical pressure that the international community is going to put on him to not do the invasion, he's going to say, fuck it, and he's going to do it. And I think that's going to impact oil markets in an interesting way. I think it's going to happen next year. And the second thing is that I think we're going to have the craziest, most unbelievable election in the history of the United States, and crazy in the sense of all of the very scary things that we always hear about when it comes to democratic systems and technology and AI and deep fakes. I think that's all going to happen next year. I think we're going to have an incredible amount of misinformation. I wouldn't be surprised if we have like very big events or swings happening because of deep fakes. I'm just very concerned with the situation and the baseline and the empowerment that generative AI has given to everybody, and how that's going to impact the US election next year. So, craziest election in history, 100%. And those are my two predictions for 2024.
Okay.
All right. Thank you guys for watching. This was the last episode of the year, and we'll see you again in 2024 for a lot more interesting conversations with the gang. Farewell, fellas.
Absolutely.